India's retail inflation has eased slightly to 7.01% in June against 7.04% in the previous month. This is despite a slew of measures taken by the central government to ease price pressures. However, the consumer price-based inflation has breached the upper limit of RBI's tolerance band, ranging from 2 to 6% for the sixth consecutive month. Meanwhile, IIP accelerated at 19.6% in May as against 7.1% in April. Let's take a deep dive into these numbers with Prasenjit Basu, Chief Economist, ICICI Securities. Prasenjit, what are the main takeaways for you this time around? I know that the last time we spoke, you were fairly bullish and confident on the GDP front. On inflation, are you seeing a reason for further concern given that the numbers are not easing off?
Yeah, the inflation numbers are clearly a worry.
Yeah.
The fact that it remains above 7% for the second consecutive month and above 6% for the sixth consecutive month, both are bad news. And the fact that it's still above 7 means that the RBI will have to continue to tighten at a measured pace, but will have to continue to tighten. And I expect that they will continue to tighten until about October, taking the policy rate to 5.5%. So that has to keep happening.
So what does this do to the kind of growth estimates you were working with earlier, Prasenjit? Because if we have the RBI continuing to hike, we have concerns stemming from further, shutdowns in China, on the supply chain. It looks like a scenario where there is no other way but to hike rates consistently now going forward.
Yes, rates need to continue to be hiked until inflation comes down to the preferred range, that is 2 to 6%. So it has, until inflation is below 6%, RBI as an inflation targeting central bank has no option but to keep raising rates. But I would stress a few things. First of all, I think that oil prices are bound to moderate somewhat as the global economy decelerates. We're seeing continuing evidence of the leading indicators for the U.S. suggesting a moderation in growth. If you look at the ISM manufacturing new orders, they fell below 50 in the latest month, and any reading below 50 is suggestive of contraction about 6 months down the road. So already we are seeing signs that the leading indicators are suggesting that towards the end of this year, we'll begin to see the U.S. economy lose a lot of momentum. In Europe, they are tightening policy now at long last, having kept things on a very loose policy stance until as late as March, April, May. Only in June and July have they really started to tighten. But that tightening is causing significant problems for some of the peripheral countries, including the likes of Italy, which have very high levels of public external debt. So all of that means that the global economy, the OECD economies are likely to decelerate. As they decelerate, and as you see a little bit of a pickup in supply from shale, we'll see oil prices coming off. I expect that oil prices will be in the $80 to $90 range for Brent crude by the October to December quarter, and that will help to take some of the pressure off inflation. So that, coupled with the likelihood of a decent monsoon. I mean, the monsoon so far is on track nationwide, but there are very many areas of deficient rain. I mean, the whole of almost the whole of Uttar Pradesh and Bihar are seeing deficient rain at the moment. So it is a fact that a large part of the country is seeing good or excessive rainfall, but there are significant areas of rice cultivation that need more rain. So the monsoon is not yet a certainty to help us on the food inflation front. Global food prices still are very problematic.
Okay. And on the IIP front, what did you make of it this time, Prasenjit? We did see an acceleration, but is it in line with your estimates?
Yeah, almost exactly in line. The April-May numbers were likely to be strong, and June is also going to be strong. Not quite as strong as May, but should be close to 10% growth year on year. So the first quarter of the fiscal year is delivering more or less on track with what should have happened, given the fact that we've had a low base effect for that quarter, right, because of the second wave of COVID last year. But I think it's important to understand that there's growing evidence that investment spending is coming through. We've seen that bank credit in mid-July was up more than 13% year on year, 13.2% year on year. That is the strongest in about 4 years or so, and that should contribute to the pickup in industrial production and particularly in investment spending. Okay. So growth, I think, is on track. Inflation is a worry, but I don't think that India needs to tighten anywhere near as rapidly or as abruptly as the US and EU do. And consequently, it'll be a fairly calibrated set of interest rate hikes that won't really disrupt the economic recovery too much.
All right, great. Prasenji, thanks so much for joining us on that. The rupee hit a fresh historical low today.